Jenny, thank you so much for joining us here at SuperReturn International.
It's great to be here. Impressive how big this conference is.
Absolutely, and fantastic to have somebody of your caliber here, your experience, 3 decades at Franklin Templeton. What sort of change have you seen during that time? And I guess what rapid change have you seen in perhaps the last 5 years as well?
I mean, I think that the one thing that hasn't changed is what our mission in this industry is, which is to help people. And at Franklin Templeton, we really think about help people achieve their most important goals in their lives, right? And it's helping them by their, coming up with the appropriate types of investment tools and products. How we deliver those is changing, right? So whether there's innovation in the types of vehicles, innovation in the technology that enables the delivery of those vehicles, and frankly now alternatives being much more, a bigger percentage of people's portfolios, and so I think that that's been a big change recently.
In terms of private equity, as you say there, they seem to be able to succeed in environments that others don't. Why is that, and what is it that they have in terms of their approach that's different and allows that success in these more dislocated kind of environments?
Well, I think there's a couple things. I think it gets a little bit overstated because I think public markets immediately price, and because they're the liquid portion of the portfolio, that's where people go to raise cash when they need to raise cash. And that allows private markets to not be repriced quite as quickly. So I think the illiquidity premium, is a real benefit to them in these types that appear to have a better return. Having said that, the fact that in private equity and private credit, you're able to have longer term vehicles. Companies are able to invest in longer term initiatives that are more difficult when you're a public company and the CEO's worrying about quarterly earnings. So that illiquid portion of that really works the advantage, I think, of the people trying to manage the companies, and that ultimately generates higher returns. And so I think that portion of the private markets is really important. And then, frankly, you're just having less and less companies go public because it's harder to be a public company. Today, in the U.S., there are half the number of public companies that there were in 2000, and there's 5 times the number of private equity-backed companies. So I don't see that trend changing.
And also it's taking a lot longer for companies when they do go public. They've stayed private a lot longer than
so
they did.
In 2000, again, that was an anomaly at the time, but companies went public on average in 3 years. Now they're waiting 10 and 11 years. And which also means that the private markets get that sort of early growth returns, that used to be captured in the IPOs in say funds. Now they're getting delayed. And all of that's accrued to the private markets.
So that's a reason for success in that area. What do you think the private equity industry now needs to do in terms of sustaining that success, given the environment we're in economically, but also do they have now to take a responsibility for their place in society more than they have in the past?
So it's funny, this whole stakeholder capitalism, I'm 3rd generation at Franklin Templeton, and when I first heard it, I was like, this is nothing new, because I was always taught that you had to take care of, obviously, your shareholders, your clients, your employees. If you didn't take care of at least those 3, then you didn't have a business over the long run. And then you add in communities. Well, that was always part of it because your employees live in those communities. And now I think the final piece they've added is vendors. I think long-term sustainable companies that manage for, truly sustainability focus on all those areas, and that isn't new. I think Franklin Templeton's celebrating our 75 years. It is because we focus on all of those things that has made us survive and thrive over 75 years. I think that with respect to ESG and sustainable finance, I think what's happening is people are realizing they can make a difference in society and make good returns. It doesn't have to be a trade-off. And when you report on how you perform as a manager, you're going to say, here's your risk, your return, and your impact. And I think it's going to be equally viewed as part of an outcome in any kind of investment portfolio.
You talked about impact there. There is impact investing versus ESG, slightly different thing. Do you think there's more? You're seeing more deliberate action in impact, not just we're monitoring our ESG credentials, but we're actually looking to invest in different areas that are more impactful?
Well, so interestingly, I think the regulatory environment, which we've all seen heat up, in the U.S., the regulators are focused on what are you saying you're doing from an ESG standpoint, and prove to us that you're actually doing that. In Europe, what you're hearing is what are you saying the impact of your investments are doing, and now prove that you've seen that impact. I actually think that you'll have sort of two areas of focus when it comes to sustainable finance. One is, what are the risks in the portfolio of these types of behaviors? And the other is, what is the impact on society by what you're doing? And I actually think that those will be two different scores, and you'll start to see the industry develop to think about it that way. I think in the area of private assets, there's a real advantage from a sustainable finance, because sometimes you have to make investments. Take renewable energy. It takes some time to make investments to get a return. If you're a public company, it's hard when you've got the quarterly earnings, whereas if you're a private company, you can make those investments to make sure that you don't have to go to market until you have something that's really working well. So I actually think there's great opportunity in the private markets for sustainable finance.
So that's one area where we've seen great change. Another that you've been quite vocal about is digital assets and blockchain and Bitcoin. Tell me about that and why you see that as an important area that we've got to be debating and not burying our heads in the sand about.
Well, it's funny. I think that I always say Bitcoin is the greatest distraction from the greatest disruption that's happening to financial services. And the challenge with Bitcoin, and almost every conversation around blockchain ends up into a debate on Bitcoin, is it's a little bit like debating religion. Whereas blockchain itself, the technology, is going to be just tremendously disruptive. So what is it? Okay, it's code that allows, through algorithms, to have a trusted transaction, and that you don't have to think about all the intermediaries anytime there's a financial transaction that prove that it's valid. Both parties are valid, the counterparties are valid, the whatever ownership you're moving, you have the title to. So blockchain with its smart contract can actually embed that, say, in a token. So if I own a piece of real estate, let's say the Empire State Building sold to 1 million people, I can, one, have embedded in that token my 1/1,000,000th of the rent, so it comes to me. And oh, by the way, when I sell it to you, in theory, I think there's still a little more work to happen, but the technology exists to allow this. I won't have to go to a title company to transition to you. I can sell it directly to you, and as long as you have my token, then you're going to have proof of ownership. So the second you can take out a lot of the costs in a transaction, you can fractionalize cash flows at a much, much greater level. And I think we're going to start to see some really interesting things. And there's going to be new investment opportunities. I mean, the NBA in the US, and I think it was 1/4, sold off video clips in NFTs and raised $500 million on it. That's like found money for them. So, I think it's really exciting times, and I think we're just starting to unlock the creativity of people to figure out how to leverage this technology.
You talked about the creativity of people there. What sort of teams do companies like yours need to be able to tap into these sorts of opportunities?
So it's a challenge, right? Because a lot of people who are excited in the space think that incumbent old companies aren't really innovative. So, what we're doing at Franklin Templeton is we have a digital asset group. The head of it reports directly to me. And you have to sort of protect them and create that entrepreneurial environment where you're encouraging them to be successful and to fail, to try new things, provide them with the capital to do it, but to have sort of your own little garden within the firm that is a innovative entrepreneurial place.
And you're very vocal about the breadth of talent and particularly diversity you need in teams too. It's so important to success and actually valuable to the bottom line.
Yeah, I mean, listen, I think diversity is a growth story, and to me, it's about having the best talent in the room. And so if you're biased, we're all biased, like acknowledge that we're all biased. There's a lot of reasons that we are biased. If we can have a diverse team, not only is it proven that a diverse team will debate things and increase the potential outcomes, which increase your chances of success. Plus, I think from an investment standpoint, today only less than 2% of venture capital dollars goes to women entrepreneurs. Only 12% of VCs are women. If you listen to the women and say why they were turned down by the VCs, they say 57% said they didn't understand my idea, right? And yet, those 2% of female entrepreneurs tend to have twice the return of an average venture capital fund. So they're obviously doing very well. And I love the example of Rent the Runway, a company that we invested in early, where I could imagine the female entrepreneurs saying, hey, by the way, women, we can't wear the same dress to a formal occasion. And the guy's like, well, we just wear our same tuxedo that we've owned for 20 years, right? And it's not a big, I don't get it, why that's, so what, you're gonna rent formal dresses? And so you have to have somebody at the table who can understand the problem that's solved. And again, another example, I have a friend who runs who's just launched a soul food restaurant called Fixin's. And when I visited his second one, he just opened a second one in LA, I walked in and I said, Kevin, I'm the only white person in here. And he found a niche, which I thought, because I was an investor early on, and I thought to myself, wow, he never would have gotten through a traditional investment committee because he'd never run a restaurant, and he was setting it up in his childhood town, which was a very poor neighborhood. You can imagine people say, oh no, you need to go where the money is. And he just hit a niche that just absolutely resonated. 4 o'clock in the afternoon, there's a line out the door. They don't even take reservations. People are willing to wait 45 minutes to get food. So again, I think that you have to have investment people making decisions who, when the pitch is made to them, the story resonates with them. And that's why having a diverse investment team is really important.
How do you feel when people talk about you being a role model, being a woman in the senior role that you're in? And how inspiring is it for you to think that you're actually being seen by young women who want to pursue careers in finance?
Well, first of all, I say my inspiration was my mother, who had 7 children and then went back to college and graduated from Stanford Medical School. So I feel like I was kind of wired this way. And yet I haven't convinced any of my 3 daughters to follow me into financial services. So I'm not sure I'm a great role model. I don't know. But look, again, I don't think about it that often. I actually just, I feel like as any leader, we are in a fantastic opportunity to make change because we provide capital. And I think from a societal standpoint, helping people achieve the most important goals of their lives, providing capital that generates change, like investing in things like renewable energy, like that's really exciting. So it fires me up every day to be in the industry that we're in.
It's quite a privileged position.
It is, it really is. It's exactly right.
So great to talk to you. Thank you so much for sharing your insights.
Thank you.